time. Let me clear my throat. Kick it over here, baby pop. Hey, good morning, everybody. Welcome to Forex.Today, the YouTube community of almost 20,000 foreign exchange traders. We gather here today to conduct technical and fundamental analysis with the overriding goal of putting together trade plans. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, never risk money cannot afford to lose. My name is Wayne McDonald. I will be your guide today on this thing we call Forex. Ask questions, get involved, click the like button, leave a comment, treat each other in the chat room with dignity and respect. Fun is fine, but we also are professionals. You are in my office, so treat this as an opportunity to be professional. There are other resources besides these live streams that I've been doing for 20 years. But besides the, 8,000 videos I have on YouTube, if you look at the description below, there's also a link to my book, link to free training courses, links to premium training courses, and a link to Trader's Way, a trustworthy foreign exchange broker that actually offers you things like fast execution speed, huge swaps, narrow spreads, and a business model based on a symbiotic relationship where if you succeed as a Forex trader, they'll succeed as a Forex broker. Which means I don't think they trade against you, which is just right. The fact that I don't think they trade against you, and the other thing is that they actually pay you your swaps, just shows you that they're different, and it's probably something that you want. Tradersway.com, the link is in the description below. Here we are. I'm using the MT5 terminal, the web terminal for MT5 via Trader's Way. You can get that at tradersway.com right on the home page. And you pop this out, and here we are looking at maybe a technical place here for maybe some continued down, up, sell, down. Could be a rabbit, could be. That could be indicative of whether we have a risk on day or a risk off day today. You trade the Dow. Is that right, Theta? Interesting. So, holy smokes, eh? Yeah, so we'll see what happens. Again, even if you don't trade S&P 500, you do want to use it as a means of measuring risk on or risk off. Another one I use for that purpose, what we call a canary in the coal mine. And if you're not familiar with that saying, Google it. Okay. Bitcoin could also be used as risk on and risk off. And right now, as far as the range we created for this sucker, last week, okay, we have a range up here. We have a range down there. And right now we're at the bottom range. And if it turns, and it looks like it's trying to, then the next focus, of course, would be back to this range and then probably around. The way I trade ranges is I tell myself it'll stay in a range forever. Forever and ever and ever and ever and ever. By the way, I've been teaching this for almost 20 years. Every time we talk about a range for 20 years, I say it's going to stay in the range forever and ever and ever and ever and ever and ever and ever. What's the next part of the speech? What's the next part of the saying? It's going to stay in a range forever and ever and ever and ever and ever and ever and ever. What's the next part? Not quite how I say it. There you go. Lewis got it. Until it breaks. Lewis got it perfect. A+, Lewis. Yeah. Hey, Lewis, is it Lewis or Luis? I think I say Lewis, and then I go back to Luis, and then I go back to Lewis. It's Luis, isn't it? Luis! Yeah, but a Lewis is with a U, O-U, right? Yeah, Luis. Yeah. That's correct. Just let me know if it's correct, right? Luis. Hey, look, people's names are important, right? Johnny gets pissed off when I call him Jonathan. So, you know, you got to address people correctly. Moses checking in from Nairobi. Right on, man. Anyway, so look, what this means is it'll stay, and then when you recognize a break, then that's significant, but until then it won't. So bulls buy low, and we're technically low, and expect a high. So they're going to expect a breakout. Okay, bears expect down, but they can't sell low. So even a bear wants this to go up. And so people that sold here are probably taking profit here, in particular with the inverse head and shoulders. Ma, 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 ma. So it's going to come up here and then head and shoulders here. Okay, until it don't. Okay. My oh my WTI. So I'm a little pissed off, and I'm being nice by saying little. I don't know what went wrong, but I shorted here. And I woke up this morning and I'm not in it. I don't know why. I don't know why. I put a little one here because I measured a 50% on this and was nope. And then that didn't work. So I waited. And anyway, so I'm in somewhere in here. Went to bed, woke up, not in it. I don't know why. I don't know why. I don't know why. So anyways, anywho, the interesting thing, we were in our day trading group during this. This is a $1 drop. Okay, which is big. That's like 100 pips on euro dollar. So that's a lot. And that candle actually occurred in 5 minutes. We're on a 15-minute chart right now, and you can see we started here, we dropped to here, and we closed here 50%. Like I said, I took a little shot here, okay, to the downside, and then very quickly got out. This dollar drop actually happened in 5 minutes. When was the last time you made 100 pips on euro dollar in 5 minutes? Not even NFP does that. Crazy. So anyways, I sold up here and WTF, I don't know what the hell. So Johnny, you did get it, huh? You caught it? Good for you, man. Yeah. So I don't know. I don't know why I'm not in that. Anyways, that's that. So I'm a little disappointed. Not sure what went topsy-turvy there, but whatever. Got to move on.com. Can't let me drag that. Can't let it drag me down. Disappointing. Spent a lot of time. Okay. Euro dollar back up. Okay. Now, the stock market is down, as I pointed out. And up until now, down means dollar strength. So maybe be prepared. Okay, maybe be prepared. Maybe dollar strength today. Okay, difficult when you have this type of scenario. Okay. In a scenario like this, a bull would buy here. So that makes it tricky if you're a bear, doesn't it? Okay. That's a double bottom. Okay. Higher high. So a bull would buy that all day. Are you a bull? Well, it really depends. I think if that's going to work, because remember, that's technical. Okay. I love technical analysis, but that's just technical. So I think today, if we have a stock market rally, then euro dollar will rally. If stock market has another down day, and yesterday was brutal, I have my reservations about that technical pattern fulfilling its destiny, because fundamentals will always overwhelm technicals. Okay. So maybe when you look at it from this point of view on a daily, the daily doesn't see the double bottom higher high. The daily just sees the pullback. Okay. And from a daily point of view, the top is here, and this is currently a lower high, which has a pretty decent probability of a lower low. Okay. So those big institutional players that are looking at daily and are looking at weekly, they don't see that little 1, 2, 3 hammock trade on a 15-minute chart. Okay. Cool. And I would take that across the board. Okay. Okay. Waiting and waiting and waiting. Okay. So we went through all of those yesterday and the day before. I've gone over the same trade plans. Friday, Sunday, twice on Monday, twice on Tuesday, and it's Wednesday. The trade plans are still the same. Remember that whole patience and discipline thing? Yeah. Anywho, yen may get strong here, as we indicated last week, and we hit that price, made a big drop, made a big rally. There's your second chance scenario, and down again. Well, Theta, I think the U.S. economy, Theta's question, do you think the U.S. economy is so strong that it'll outperform the other economies? Yes. Then the next part of the question, or do all economies suck? Yes. Okay. The U.S. is taking advantage of our current situation. It's exporting so many economies that it's reversed the balance of trade because they're selling them at high prices. We're also selling weapons to Europe like crazy right now. And we just negotiated with India to stop buying weapons from Russia and instead buy them from America. So we're getting some good deals here. Okay, taking advantage of the situation. Okay. War is good for business. It's not quite true, actually, but I know the saying. But it is an opportunity, and more likely that Russia is being isolated. I'm actually very disappointed that the Indians were buying Russian weapons. That disappoints me, but now they're going to buy American. Okay, that's better. Cool. So whatever, but we have to understand that this is still all of it. This whole situation is all related to COVID. The government's overreacted, but you know what? It's the first global pandemic since probably the Spanish flu. Now, Asia's been through a few, what they used to call the Asian flu, then the bird flu, and this flu and that flu. So this is the third time around for Asia. Now the Chinese apparently still are heavily inflicted with it, but whatever. It's not their first rodeo, but as a global problem, right? It's sort of a good practice round, actually. But the governments, and maybe rightfully so, overreacted. But at the time, dude, things were pretty bad. So nonetheless, this is still a consequence of the actions taken. Luis says buy government bonds, but isn't that market crashing? If interest rates are rising, you should be selling bonds. So anywho, yeah. So we just gotta pay the penalty. The stock market was outrageously high because we were flooded with free money, and the free money is being removed. And what the free money can be removed is being removed. Some of the free money cannot be removed, and therefore creates inflation. So now we got inflation. Okay, great. But at some point, this market repricing of assets should normalize when it comes to monetary inflation, which is demand side inflation. But what we need is the global supply chain to normalize. So how much of, let's say, the stock market drop is related to demand inflation? Well, much of it. But that may have been priced in or priced out, whatever you want to say. And now we're pricing in, a long ride before we get back to normal. So anyways, if the stock market's down today, I'll probably buy dollar and probably buy yen. Okay. So that's it. The same plan from yesterday and the day before. So I'm not sure what to say next because we already talked about it 2 or 3 times. In the day trading group, we've talked about it 2 or 3 times as well. Today is Thursday, so it's swing trading group day, and we're going to plan out next week, which is always an exciting day. So unless there's other questions, I think we could just make today just a quickie stream, right? Risk off until it's not. Generalized question, sure, about the dollar index. Well, inflation doesn't necessarily, impact the dollar, but you could argue the definition of inflation is a weak dollar. Okay, fine, because you need more dollars to buy something. Okay, Zach? All right. But it has to do with global trade and therefore the global economy and the flow of capital around the world. So in a situation like this where we have a global economic slowdown, risk-off sentiment, the key here is global, the dollar tends to strengthen. Okay? So how does inflation impact the dollar index? It's not quite the right question. How does global trade impact the dollar index? Okay. So you have to understand, Zach, that you are particularly talking about the reserve currency. Okay, you see? Not just a currency, not a hypothetical currency. And usually that's what economic textbooks talk about. Some hypothetical currency in in an open economy, such and such happens, and what happens to this currency? Well, a reserve currency is different. So in this case, the dollar gets strong because of a contraction in global growth, which is a way of one way of thinking about it is the whole world is in recession related to COVID shutdowns, supply chain problems, and that will strengthen the dollar. Yeah, and some of it might be, for example, investors that had money invested overseas. Where overseas? Don't matter none. So Americans, for example, when times were good, let's say, USA, God's country, okay? They invested here and here and here and here. And one reason they invested is that the U.S. stock market was at all-time highs. So they already had money in the stock market. And they might have actually taken some profit, which is normal during rebalancing time, and suddenly had cash. And then like, well, our mandate says we can't just buy more S&P 500 because we just got out of the S&P 500 to rebalance. Okay, great. So what do we do with this cash? Well, we're making so much money. Let's reach for higher yield, or let's reach for higher growth. And so you invest into Australia or India or China or Germany. Then all of a sudden the market turns and things go bad, and these investors instead go back to cash. So like what happened is, you think about cash. In this case, American dollars. American dollars went here when times are good, okay? And that means the dollar weakened. Then times go bad, people cash out of that investment, go back to cash and bring it home. Dollar gets strong. Same thing. Money returns home, dollar gets strong. Money returns home, dollar gets strong. Money returns home, okay? Okay, so when times are good, Americans will stretch and reach out and invest their dollars overseas. And when times get bad, they cash out and they bring their money home. Dollar gets strong. Okay. Pound swishy short yesterday? Yeah. All right, cool. We squeezed in some fundamentals. I feel like we've had a complete day. Would you please click the like button? I know this was short and sweet, but I think we've said everything. If we wait any longer, I'll start singing or some horrible thing like that. So we got work to do. The market's going to open soon. Could be some good trades today. Could be an interesting mover. Things are so bearish, maybe we get a bullish day. Could be interesting. Yeah. Yeah, and again, if you are a member of FX Bootcamp and you've upgraded your account to unlock the swing trading group, I will see you at 4 p.m. and a few dozen of us will plan next week, and we will do that today. If you like that idea of planning, days ahead for something that could last many days after that, if you're sick of chasing 5-minute candles, instead would like to talk about 3, 4, 5 daily candles in your trade planning, the Swing Trading Group is a whopping $99 a month. The thing is, you're going to meet some other currency traders just like you that are trying to improve in many ways just like you, and you will be able to collaborate with them, not just ask me questions or listen to my speech, but collaborate with fellow traders on a very similar journey as you. And I think you will appreciate it a lot, actually. So with that being said, maybe you'll join fxbootcamp.com. So thank you to you. Thank you to YouTube. Thank you to Trader's Way. And I will see you later. Peace on earth. May the pips be with you. May your profits be above average. That just happened!